Yeah, I'm muted. There we go. Good evening, everybody. How are you doing? Man, it looks like internet is a little slow tonight, y'all. So y'all gonna have to forgive me if I seem like the Korean movie, but my lips are moving and the sound ain't matching. I don't know what's going on, but we are here. Please put in the chat box where you are watching from. We have a very important show for you tonight. We're going to be talking about taxes. We're going to be talking about the new tax changes, things that you need to be looking out for as it relates to all of that. And so that's what we're in store for this evening. So I'm closing out some things, guys, hoping that my internet will do a little catching up here. So just put in the chat where you're watching from. And last week, y'all, we were here and it was election night in Georgia. And so, of course, now that election is over, we know that Pastor Warnock has won the election in Georgia. So go Georgia. Thank you for turning out to vote. You know, no matter who you vote for, it's important that you exercise your vote. Last week, we had Montez Diamond on the show, and she was talking about being an advocate, right, for small businesses, you know, and she's the regional director of advocacy for the Southeast region of the Small Business Administration. Really gave us some great tips, right? Gave us some great tips in terms of things that are coming down the pipe. And as I was thinking about tonight's show and what we have going is that, you know, taxes are a big deal, right? Taxes are a big thing. We need to make sure that our voices are heard as small business people, individuals, and what have you. So we're excited about that and all that good stuff. So Kimberly is in the house. Thank you, Kimberly, for being here each and every week. We do appreciate your support as well. So you guys, she was not with us because she was busy training last week. So she says, we have to find out what she learned, right? So let's welcome Michelle Mitchell onto the stage.
Hey, Tony.
Hey, Michelle, how you doing?
I'm good. How are you?
I'm doing good.
Good.
This thing is really off to me, and it is driving me nuts. So
just don't look at yourself. That's all.
Just don't look at us. Yeah, because you're perfect and perfect timing and all this kind of stuff. So, you know, apparently we have some internet issues going on over here. You guys, let me tell you something. It's Michelle's birthday today. So put in the chat, happy birthday to Michelle. It's her birthday. Michelle is, I ain't gonna tell you how old she is, but Michelle is a year older today, right? A year older, all that good stuff. And so I want to wish Michelle a happy birthday. And how about this for commitment? Here is birthday evening. And she is where? On the Real Money Coach.
I know.
You know that deserves a shout out in the chat.
Yes.
Happy birthday to Michelle. So Michelle, tell me, how was your day today? How was your birthday?
My birthday was busier than I expected, but it started out with a surprise. My brother sent me breakfast this morning.
Really?
Yes.
He sent you breakfast.
He sent me breakfast this morning. Yes. So nice surprise, because we were like, who's at the door?
Really?
Yeah.
Now, which brother would that have been if I can ask?
Of course it was Von Derek.
Derek. That is so awesome. What a thoughtful guy.
That was very thoughtful. Very thoughtful.
That's a great way to start your birthday.
Yeah.
Somebody bringing you breakfast. You didn't pay for it. You didn't cook it. No. You didn't have to wash the dishes. I mean, come on.
And then I got a text from my bestie, and she was like, happy birthday, girl. Thank you so much for being in my life. And she sent me some money.
What?
I was like,
what bestie? The bestie that I know.
The only bestie I got.
I did hear about that just a few minutes ago. That's pretty sweet.
So I was like, bam, bam.
There you go. So that's awesome. So it sounds like you worked today, though.
I did work today, Tony Jackson.
That is a surprise.
I did stop at 3:00. Okay. And I took a nap because I'm still jet lagged.
So you were at the Quicken conference.
I was at the QuickBooks conference last week.
QuickBook
Yep.
conference. And where was that
Mhm.
taking place?
Las Vegas.
Oh, you were in Vegas.
Yes, it was at the
No.
Aria. hmm
So how was it?
It was a lot of people. I was not expecting it to for there to be so many people, but from what I understand, people are ready to get out and get back to some normalcy, um, and things. So it was great. The conference was great. Intuit just knows how to do conferences, so that
Good
was
stuff.
good. The classes were great, very educational from the beginner to the seasoned firm owner. So
Okay.
um, it was very good. But
So
Vegas is a different vibe because it's never been in Vegas before.
okay.
So this is first year in Vegas, and the alcohol was flowing even during our sessions. I was like, really? Yeah,
So, but you were in Vegas. You know
I
what?
was
What happens in
in
Vegas
Vegas.
stays in Vegas, right? Is that what they say?
Yes,
So, so is it like main sessions and then breakouts
yes,
or that type of
yes.
thing? Okay.
Yep. There were main stage sessions, and then we had most of it was breakouts.
Okay.
So most of it was breakout.
So what are some of the breakouts you attended?
So the breakouts I attended were about building teams,
Okay.
team culture, company culture, advisory services. So those are some because that's what I'm focusing on right now. So
Exactly. Okay.
um, that's what I attended. But there were QuickBooks training classes for beginners, kind of thing,
Okay.
how to go from solopreneur to, you know, beginning to start a team. So
Good
it,
stuff.
yeah,
Now,
it was a wide
Intuit
range.
it is also TurboTax.
No,
Is that
no
no?
tax.
It's not. Okay.
Intuit does own TurboTax though. Yes.
Okay. But this was just QuickBooks, no
QuickBooks Online.
TurboTax
Yeah.
track. Okay.
It was
Got it.
QuickBooks Online and then all of the applications that connect to QuickBooks. So that's what was on the exhibit floor was
Okay.
all the different apps that do widely different things, but all things that we need to either run our practices or service our clients.
Awesome. So sounds like it was a good training. How long was the conference?
It was 3 days.
3 days. Okay.
Yep.
Good
hmm
stuff.
It was jam packed too. When they partied every night. Like, yeah,
Yeah. That's what conferences, a lot of them do.
I know. But the networking is probably the most important part to me.
Okay.
Yeah.
Made a lot of great connections and
A
all
lot
that
of
good
great
stuff.
connections. Yeah.
Well, good for you. Well,
So,
your business is just exploding. I mean, I'm just looking at it in awe. And I got a email today
uh-huh.
to book a time on the calendar for the audio
The
conference
audio summit.
summit.
Yep.
Audio summit. So
Yep.
tell us a little bit about the audio summit.
Yeah. So the audio summit is going to be, I'm going to be interviewing like my squad, which
Okay.
I've chosen people of the squad, and you're a member of the squad who can give me um advice on different areas of the business. So I'm doing interviews with you guys, and we're going to make it available on a podcast.
Okay.
Yeah.
It's awesome. Well, one of the things it asked me, what questions do I want you to ask me? I don't know. You ask me what you want to ask me.
Well, I know. Well, I really know you, so like
Yeah. I ain't like
and
them
we talk every week,
other
so
right.
it's a little bit different. Yeah,
All right. Right.
yeah.
So, speaking of podcasts, Michelle, we are just about there launching the podcast for the radio show that we do on Tuesday morning, or excuse me, Saturday mornings at 7:30 a.m. It's actually available. We just have to download some more episodes to kind of fill up the so that we have a good catalog of them.
Right.
and just really kind of fishing up the graphics and some of those type of things. So we're ready to enter that podcasting space as well. And so
I think
it'll be
there's
great.
a lot of advantages to that, to being
I
in the
do.
podcast
So
space.
what do you think are some of the advantages?
I think um I think you probably have better reach. People can listen anytime. So, a video, you feel like you have to sit down and watch the video, but you could put earbuds in your ear and you can be cleaning your house or cooking or, picking up and dropping off kids. It,
Right.
it doesn't matter. You can be doing a lot of things and still listen and consume a podcast.
Yeah. And working out or whatever you
Working
have to
out
do.
or, yep, anything like that. And I also think that when someone is in your ear, um you there's a connection that's created because
Mm.
they're in your ear. You're hearing their voice. um I just think there's a better connection that can be made through the audio. um
Interesting.
yeah, that's what I believe, because the people that I follow on podcasts, like, I'm an avid listener. So
Do whatever they
I,
do.
yeah, to whatever they do.
And
And
how frequently do they put on episodes?
typically once a week or once every
And
2 weeks. It just depends on the podcast itself.
the episodes are how long normally?
20 to 35 minutes.
Yeah, there you
They're
go.
not
Yep.
long.
Yeah, and
Yeah.
that's the other thing I think is key. So,
Mm-hmm.
and we know that ours will be exactly 29 minutes and some seconds every week because
Exactly.
it is the radio show
Mm-hmm.
gone podcast, and
Yes.
so we're almost done with the graphic, and then we'll be able to share that and start to let people know that they can get the podcast. So love that,
Yeah.
love it, love it. That's
Yep.
pretty awesome. So, and I was going to think, what else is going on? Any other top news stories that we need to talk about before we bring our guest on? Well,
You
let
know,
me ask you this:
uh-huh.
Deion Sanders to Colorado.
Yes.
What's your opinion on
Oh man, Tony and we've been talking about this over the last week.
it?
So I have mixed feelings about it a little bit.
Okay.
I'm excited for him, to get this opportunity. He's taken along with him his son. Um,
Yeah.
but then I think about, Jackson State. Like, he made a really good impression on that school. He raised awareness,
For
to the
HBCUs.
HBCU movement. So now, is there a void? Who's going to fill the void? Those are some of the questions that I have.
Well, in previous there was nothing, right?
No
So
awareness,
no
right?
awareness, and now
Yeah.
that he created it, he leaves. It does leave somewhat of a void.
Yes.
And I've heard different
So,
opinions about it, as well. Some people
so
have
does
really
he continue to
gone in.
promote HBCUs and be at Colorado State? I don't know if he can.
Well, here's the thing: is did he leave a blueprint of what someone else
Right.
can come in and do?
Mm-hmm.
And I know that there's other people who aren't getting the same success, who may be former NFL stars.
Mm-hmm.
But one of the guys that I was listening to the Breakfast Club, and he just really went in on him because not Charmaine the God, but one of his guests, and really went in on him, saying that he really could have changed the whole trajectory of HBCUs,
Yeah.
because if he
Mm-hmm.
did it, then other stars would come. And
Yes.
now, if we're starting to pick the top 10 talent across the country, right?
Mm-hmm.
5-star talent across the country, and get them to HBCUs, now the stands begin to be filled. So now the
Right.
income and the revenue comes, and it can help them sustain long-term sustainability. But
Yes.
then again, you got to ask yourself, is that is it fair to put all of that on one
All
person?
that on one person. Yes, you're correct. I would agree with that.
And you got to
But
think. I think they said like while he's been on campus, his car's been broken into 3 times. His son's car's been broken into.
mhm,
They broke in and stole all the stuff out of their locker room during the
right.
game. You know, and all these type of things that happen. But you know, I just think that we can't be mad at somebody. I mean, 5 million versus
No,
300,000,
right.
and
Yeah.
you know,
And he was looking out for his staff, which is what I do appreciate. Because he got the contract, but the staff didn't necessarily get the larger contract. So now going to the new school, he can get them the money that they deserve as well. So
so he was making 300,000 a year
mhm,
at Jackson State. Donated half of that back to the school.
mhm,
And under his new contract at Colorado, he is going to be making 5 million. And they also gave him 5 million additional to
mhm.
hire staff.
Right. Yeah.
And so that's pretty sweet. So
I mean, that makes a difference. It
yep,
does.
yep. So
Yeah.
interesting. So speaking of
Yeah.
all this money flowing around, guess what people got to do, Michelle?
They gotta pay
They
taxes.
got to pay taxes on all this
Yeah.
money. So what we have tonight, who we have tonight is Timothy Daye. Timothy Daye is one of a good friend of mine. Timothy Daye is a good team member on my team. And Timothy Daye is the founder of Daye Financial Enterprises, specializing in taxes, specializing in nonprofits, and even the pastors, Michelle. I know you work with a couple pastors in terms
Mhm.
of what they need to be doing for their own retirement. So without any further ado, let's bring the man himself on the stage, Timothy Daye. How are you?
Good evening, Tony and Michelle and the Real Money Coach family. Thank you so
Hey,
very much for having me
Timothy.
on this evening.
Yeah, man. How you
Welcome.
doing?
Oh, doing fine, doing just fine, doing fine.
Man, it's tax time almost, bro.
It is.
And you know, there's a lot of going on, and you know, we like to do this, you know, at least once a year, going into tax season in terms of some of the things that you need to be looking out for, and then somewhere towards the end of March, early April, we'll have someone else come on to talk about, hey, listen, if you ain't got your taxes done, you need to do this in the next
Mhm.
couple weeks, right?
Yeah.
But this is for the people who are going to be proactive up front, get this stuff done, and send it in to their tax professional. So, Tim, we want to leave some good tips for them. But before we do all that, tell people a little bit about you and your background and all that good stuff.
Yeah. Well, my name is Timothy Daye, and the president of Daye Financial Enterprises, specializing in individual tax preparation. And as you mentioned, I actually work with charitable organizations, primarily churches, in working with their financials and making sure they're having things in order in terms of paying proper payroll taxes, and they're having proper accounting systems to properly account for the revenue and expenditures that are part of carrying on the ministry of the church. And so those are some of the areas I specialize in, and look forward to elevating our community in terms of getting them where they are growing and prospering financially.
I'm muted there. Okay. So I was going to say that's all good stuff. So Timothy, with I have a couple things, and man, I should have really kind of texted you ahead of time and asked you about this. One of the things I want to ask about is EVs, electric cars, right?
Mhm.
And there's some
Say that
tax
one more time.
credit, electric vehicles,
Okay.
the EV tax credit. I'm understanding that there's new credits available for those who go out and purchase a electric vehicle. I saw that on the news the other day, and I was like, I didn't know there was credits there. I know Duke Energy here in North Carolina, they'll pay portion of the cost of having your electric port put at your house and that type of thing. But we have this movement towards electrical vehicles.
Right.
And I think that there's some credits available? Like I said, I'm sorry, I'm kind of throwing that one at you because we hadn't talked about it. But what do you know anything about that one?
Yeah, when I look at it, information as it relates to changes in the tax law around that, information out there is about new tax law for 2023. So right now we're in the position where we're preparing to prepare our 2022 tax returns.
Okay.
But for 2023, there will be some tax credits coming out, and it's not a whole lot of information out there right now, but there are some changes definitely coming in 2023 as it relates to electric vehicles.
All right, so I'm gonna tax your head. Okay, I'm gonna tax your head. We got it. Maybe I'm looking for an excuse. I don't know. Maybe I'm looking for something. I don't think I'm qualified, but maybe I'm looking for an excuse.
That's where tax planning come into play. If
right.
the tax rules of 2023, you can make those moves now.
Right.
Advantage of those tax credits that are coming.
That is true.
Absolutely. So, man, tell us some of the things. We kind of let you loose. Tell us some of the tax changes and things that we need to be aware of for the filing of 2022 taxes.
Yeah. Let me just first sort of give you a walkthrough of the whole process for preparing your tax return. You know, you gather information to prepare your tax return. And often when you talk to people that are in the business, you hear people talk about above the line and below the line deductions and those types of things. And there's some definite benefits to those different types of deductions. For example, above the line deductions are things like you talked about the ministers and those that are self-employed. You know, you get to deduct 1/2 of your self-employment taxes from your income as an above the line deduction. And the reason why that's important is because that deduction allows you to reduce your adjusted gross income, which is used to calculate other things, you know, as it relates to preparing your taxes. So if you have an option to take a deduction that's an above the line deduction, that's a good thing because you're able to reduce your taxable income. Likewise, if you have a small business and you have a loss, that loss is calculated as an above the line deduction in terms of reducing your adjusted gross income. So conversely, compare that to a below the line deduction, things like itemized deductions and deductions of that nature. Those are deductions that reduce your taxable income. And where that is beneficial is that it reduces the amount that you have to basically calculate your tax liability on. So above the line is used to establish your adjusted gross income, which can be used in other areas of the tax return in terms of determining if you qualify for other deductions or those types of things. And below the line deductions actually reduce your adjusted gross income to arrive at your taxable income. So that's sort of a gist. And then you have the difference between deductions and credits. So if you have an ability to choose between a deduction or credit, typically credits are to your advantage in terms of credits are dollar for dollar reductions of the tax that you owe, whereas a deduction is a reduction in a decrease in the income in arriving at your taxable income. So for example, if you are a taxpayer and you have $1,000 tax liability, a tax credit could potentially wipe away that $1,000 tax liability that you owe.
Right.
Whereas a deduction, for example, if you are in the 25% tax bracket, just keeping it simple, and you have a $10,000 deduction, it basically reduces your income by $2,500.
Mm-hmm.
Got it.
Okay. So a deduction versus a credit. And then you have credits that can be refundable credits or non-refundable credits. So refundable credits will allow you, even if you owe taxes, it could eliminate the taxes that you owe and actually generate a refund. Whereas a non-refundable credit allows you to reduce the tax that you owe, but it cannot generate a refund. So those are some of the nuances that go into preparing one's tax return.
Well, I have a whole lot of questions. It's funny.
Yes, I have a question too.
Go ahead, Michelle. Ladies first.
So Timothy, from a business perspective,
Yes.
I hear a lot about this ERTC credit, right? For payroll, right? For employers who have payroll. But it's for research and development. And some businesses think they can get that credit.
Yeah. When it comes to those credits, there are a number of credits that businesses could potentially qualify for, and they are pretty numerous. There are certain forms that actually itemize the different types of credits that businesses are eligible to claim. For example, if you are a business owner and you employ someone that was incarcerated, there are business credits that you can receive for employing them. So in terms of those types of credits, I mean, you need to definitely make sure you do the homework to make sure that you are eligible for that credit and understand what the requirements are in order to be eligible for that credit. And there are tons of different types of credits. And when you start thinking about the IRS tax forms, I mean, there are like thousands of tax forms. So it is quite enormous. So I just say do the homework in terms of what the requirements are for the credit.
Here's the thing for me, and this is even a conversation I had with a client today, and the client said, "I got to hurry up and make a contribution to an IRA because I'm on owe taxes." And so my question was this: I mean, I said, "Well, if you didn't owe taxes, would you be making this contribution?" He said, "No." And I said, "Well, you need to look at exactly what you're getting for making the contribution, because say you make a $5,000 contribution." And you're in a 20% tax bracket, you're not going to save $5,000 on your taxes.
That's correct.
You're going to save $1,000. So you're going to spend $5,000 to save $1,000. Is that what you really want to do?
Right.
Now, if it's something that you were going to do anyway, then yeah, it makes sense to do it before the deadline and get the tax credit for it. But if not, and that's what we see a lot of people do is like, oh, I got to get these, I got to spend this money so I can write it off. Well,
right.
I don't think it's good stewardship or good business management to just go out and spend money on things that you weren't going to do. Just to save the taxes on it.
Exactly.
I mean, that's kind of, at least my thoughts on it.
Yeah, I agree with you wholeheartedly. I've even had conversation with individuals that are just trying to decide if they want to pay their house off or not. Mortgage interest deduction is probably one of the last big deductions that allows an individual to be able to itemize. But again, just with the scenario of the IRA, if you pay $10,000 in interest and under 25% tax bracket, you're paying $10,000 to save $2,500.
Right.
Let me keep the $10,000. I'll pay you the $2,500. I have $7,500 down to do something else with that I want to do.
Exactly.
So I agree with you wholeheartedly.
And that's been the argument for as long as I can remember. People saying, "Well, pay off everything except for your house because that's the only write-off you have."
Right.
Well, like you said, if I could save $10,000 in interest, and I just go ahead and pay that, you're still coming out ahead.
Exactly.
And the other thing that you were talking about above the line and below the line, businesses are above the line, right?
Correct.
And so that's why. Is that why they're saying that's one of the best write-offs you can have is at a home-based business?
Absolutely. And again, in that summary of the tax return, that above the line deduction, if you have a net loss, actually goes to reduce your income in arriving at your adjusted gross income. And the reason why that's important is because that adjusted gross income number is used elsewhere throughout the tax return to determine if you qualify for, say, the medical expense deduction. So if your medical expenses are greater than 7.5% of your adjusted gross income, the lower you can get your adjusted gross income, the greater the chances that your medical expenses may be deductible. So when you find those above the line deductions that reduce your adjusted gross income, it may allow you to take advantage of other deductions later on in your tax return.
So let's talk about the at-home business. Give us some ideas, some thoughts. I know we did a little bit of this on Saturday in terms of what are some of the business deductions, what some of the things that we can do to take advantage of having an at-home business enterprise.
Yes.
Well, that's a golden opportunity for you to leverage some of the tax code in terms of reducing your taxes. So, for example, if you have an at-home business and you use a portion of your home in your business, you are able to deduct that portion of that home that is used for business as part of your business expenses. So you can capture things like your utility bill. If you make repairs to that home office that are exclusive to that home office, then that is deductible in reducing your taxable income at 100%. Let's say if you do something that helps the entire home, then you are able to then reduce the portion of that expense that's related to the home office is now part of your deduction as well. But in addition to that, you have other deductions that as a small business, such as Section 179, which is personal property placed into the business. And so let's say you were a landscaper and you bought a $30,000 truck for your landscaping business and you made $100,000. Under Section 179, you could actually be eligible to expense the full cost of that truck in the year that you actually purchased it and placed it into the business. So that $100,000 gets reduced down by $30,000, the full cost of that truck under Section 179. So those are some of the benefits of having that home office, that home business in terms of creating expenses that you are able to offset your income against.
So that just makes a lot of sense for most people to have some type of home business so they can write off those things and whatnot. So that's why we believe everybody needs to turn that passion into what, Michelle? Profit, right?
Profit, absolutely.
So does it make a difference if I'm a sole proprietor or LLC?
Well, because both of those are pass-through entities, then ultimately all of that flows to your individual 1040. So for example, with an LLC or partnership, LLC or sole proprietorship, that's all passed through. Like with the sole proprietorship, you would fill out a Schedule C, which flows to your 1040 as one of those above the line items in terms of how it's captured as it relates to your income. But both LLC and sole proprietorships are both pass-through entities and flow directly through your 1040.
Okay, and I know that there are some advantages to being an S corp. I've heard.
Yeah. So that's a subchapter S corporation. So one of the advantages, one of the big advantages is probably the liability protection that is incorporated with becoming an S corp. And not an attorney, so definitely want to speak to an attorney about the legal benefits of being an S corp. But there are some advantages from a tax perspective as it relates to becoming an S corp in the way certain incomes or items are treated as an S corp. So reviewing that with your tax preparer is beneficial in terms of making sure that you are capturing all of the benefits available to you in making that particular election.
Got it. Another big trend There's people saying hiring your kid into your business. What's your thoughts on that?
There is a place for that. However, you must be very clear in terms of the responsibilities that are being provided, and the compensation must be reasonable.
Mm-hmm.
You can't, hire them to file papers and pay them, $50 an hour.
Right.
That type of thing. So that there is a place for that, but the compensation must be reasonable, and you must have clear job responsibilities and duties and those types of things as you would any other employee.
Yes.
Is there age? Go ahead, Michelle.
No. How can you pay them as a contractor or like as a W-2 employee?
That's a very good question. Oftentimes when I'm meeting with my church clients, that conversation often comes up.
Mm-hmm.
When you talk about employee versus independent contractor, a large part of that has to do with the amount of control that you as the employer have in exercising the duties and responsibilities of the individual.
Mm-hmm.
And particularly if your business supply the individual with the tools to get the job done, that's also a critical component in determining that person is most likely seen as an employee versus an independent contractor. Typically, an independent contractor would provide his or her own supplies, equipment, work, manpower, and those types of things, and would be issued a 1099 at the end of the year.
Yes.
So what about
hours?
That's
a very common question.
What about hours? Hours worked, those type of things.
As it relates to
the independent contractor versus W-2. Like if I require an independent contractor to be on the job from 9 to 5, and that's it. I don't require, they buy their own stuff or whatever, but they need to be on post, so to speak, from 9 to 5.
Well, I will say that would start then to have to look at the amount of control that you are exercising over that individual. And if there's ever a doubt as to how it should be treated, the IRS actually have a form SS8 that you can complete, and it will ask you a series of questions, and it will help guide you through determining whether or not that person should be considered an employee or independent contractor. But if you're putting very hard stipulations on when the person has to be there and those types of things, very likely
they're an employee.
Seen as an employee.
Absolutely.
Yeah, you're teetering that line, right?
Yeah.
You walk in a fine line and it ain't gray, right? And
right.
Yeah.
Yes.
So I think,
and I use this example oftentimes with with my church clients in terms of particularly, let's say, the person that maintains the lawn at the church. He or she provides their own lawnmower. They're bringing their own staff. They're buying their own gas. You might say we want to cut once a week, but they pretty much go and do their thing, and you have agreed upon price for how much they charge per cut, or how much you pay them per month, that type of thing.
Got it. So the church world and taxes. Oh my goodness. Let's talk a little bit about that. Let's talk a little bit in particular. I know, Michelle, you've had some churches and pastors have been clients. I've worked with some. So talk to us a little bit about how pastors are treated as it relates to being independent contractors, or are they employees, or how does that whole thing work?
Yeah, well, ministers are a little bit complicated in that they actually have a dual reporting status. So they are considered employees for income tax purposes, but are considered self-employed for self-employment tax purposes or for Social Security purposes. And the interesting thing about that is that with the self-employment tax, they should actually be paying estimated taxes so that they don't have a huge tax liability at the end of the year. And then in addition to that, their compensation is quite unique in that, the church body would vote on the pastor's compensation and determine what portion of the compensation is deemed his or her housing allowance versus what salary. And the real benefit there for the minister is that the housing allowance is not subject to income tax, but it is subject to self-employment taxes. And conversely, the salary and wages would be subject to income tax and Social Security tax. Now, there is an option for ministers to opt out of Social Security. I don't particularly recommend it, but that option is available. And in determining that compensation, in preparing their W-2, and that's what the minister should receive. They should receive a W-2 to report the wages, and in box 14, you should indicate what portion of their compensation was deemed housing allowance, and from that, the pastor should make the necessary estimated taxes, definitely to pay the self-employment taxes. And you can have a voluntary agreement with the church to take or withhold the income taxes, but he or she should pay their own self-employment taxes.
But it's still wiser for a pastor to have a portion deemed as a parsonage allowance, even if there's no physical parsonage, right? But to have a parsonage allowance, because that will save them on the income tax. It's not going to save them anything on the self-employment tax, but it would save them on the income tax part.
Yeah, that is correct. Yeah, that's a definite benefit in identifying what portion is housing allowance. And I often share with my clients, I have like a housing allowance worksheet that basically outlines, things that they're able to include as part of that housing allowance. For example, if you are you're going to be refurnishing your home, you can actually include the purchase of new furniture as part of your housing allowance for that coming year.
Oh, good. Got it.
Yeah.
So Timothy, what about the love offering? What about the love offering?
Right.
The love offering. Love offering. We're not going to pay Pastor, but we're going to give him a love offering. Okay. Tell me about the love offering.
Well, per the Internal Revenue, they don't care what you call it. If any services were rendered, it's taxable.
Yes.
And so it's one of those things that we are accustomed to taking up a love offering, and if it is solicited in the church, it needs to be taken up, counted, and then you write a check out to the individual for the amount that was taken up for that love offering. And it should be included either in their 1099 or W-2, whichever type, if it's a guest minister, they will receive a 1099. Sure. If it is your actual pastor and you're giving them a love offering, it would be part of their W-2 as taxable income.
But what if, excuse me, y'all, what if I give him the love offering or her the love offering outside? I mean, I ain't putting it in the offering tray. I ain't putting it in a basket. I'm just going to say, here, Pastor, my gift to you.
That's it. That is truly a gift.
That's a gift.
Pastor.
Yeah.
That's a gift to the pastor.
And so you can give a person, according to IRS guidelines, right? You can give them about $16,000 a year, and it's income tax free. There's no tax.
Income tax free. Yeah. But that would be a true gift in that scenario.
So got it.
But if someone stands up in the front of the church and solicit to take up a love offering, it needs to be counted and a check written out in the amount.
Man, let me tell you something. When I first became a treasurer, they would do a love offering, pastor's anniversary, and they like, the trustees would collect it and they put it in a bag and gave it to them. They didn't count it. They did nothing. Like, okay, here it is. We don't count this. We just get this. I'm like, man, y'all crazy. That don't work.
But the interesting thing about that is, even if that happens, there's a duty and responsibility for that minister to still report that as income.
Mm-hmm. Okay, preacher.
But I think it is. I think that is a unique environment, a unique situation when you have pastors and that type of thing, and just knowing what the rules are, because that's where we see a lot get in trouble. I mean, we've seen, you know, of course, the most famous is here in North Carolina with Jimmy Baker and all those type of things, where the IRS kind of really went after them because of all the money that was being collected. That was probably a wake-up call for a lot of ministries in terms of those type of things. And you know, the other thing is that oftentimes that you have congregations that will supply the pastor with a vehicle.
Mm-hmm.
Mm-hmm.
How is that treated?
Oh, that's calculated as part of compensation based upon the fair market value.
Yeah.
So the fair market value of the use of that car should be included as income.
Mm-hmm.
Yeah.
Got it. I mean, it all makes sense, but you know, so often we kind of skirt by some of those rules because we don't know them.
Right. Which is why I am a proponent of hiring professionals.
Yes.
They keep you out of trouble. Hire professionals. Don't just wing it, or Johnny said we can do X, Y, and Z. No.
You don't
I actually got a call.
Yeah. Hire professionals.
I actually got a call this week from a client that they were looking at giving their employees a bonus, but they said the employees didn't want to have any taxes taken out. I was like, that's not their decision to make.
No, it's not their decision.
So I said, you know,
like employee versus contractor.
Right.
That is not the individual's decision.
Right.
It's not.
So the employees didn't want any taxes taken out of it. The employees don't want it on the W-2 at all.
Right.
They don't want it on the W-2 at all. But if they get it, then you know, and there's some things that we can do, executive bonuses and those type of things that we could do for clients. But again, that still ends up as income to them.
Mm-hmm.
That is correct.
Yeah. So, and there's some very complex ways to get around that in a corporate environment, you know, split dollar arrangements and some fancy things that you can do in terms of the corporation loans the money as part of a split dollar arrangement that you can avoid taxes at least until at some point in the future. And then Uncle Sam gonna get his, right? Uncle Sam.
One day. Yeah.
One day.
Pay me later.
One day.
Either pay now or you pay later.
Right. Right. One or the other, right?
One or the other.
Exactly.
So, Timothy, we have about 10 minutes left. In these last 10 minutes, is there some tips or some things that you could leave our audience with in terms of preparing to go see their tax professional? And you notice I said go see a tax professional. Too many of us have done it on our own too long. But give us in this last 2 minutes some tips and some things that you know, maybe your top few tips for people as they're approaching the end of the year.
Yeah. Well, you know, definitely I would say having your information organized is so very important. Having the necessary documents, you know, it's amazing the number of people that come and don't have all of their W-2s or their 1099s. Having information as it relates to your home mortgage interest, the property taxes that you've paid as it relates to your home or personal property, because if you're able to itemize, then those items should be included as part of your return. Understanding the difference between the standard deduction versus the itemized deduction. The standard deduction is the deduction that everyone gets regardless if you itemize or not. And you typically take the higher of the two. So if your itemized deductions are greater than your standard deduction, then you want to take your itemized deductions because they reduce your taxable income, which ultimately reduce the amount of tax that you owe. Conversely, the standard deduction is the amount that is allowed for individuals that don't itemize. And when the standard deductions were increased, there were individuals that were accustomed to itemizing that were no longer able to, because the standard deduction had increased to a point that they didn't have enough to itemize anymore. But at the end of the day, as long as you're taking the higher of the two, then you are adjusting your income accordingly. Also, keeping record of your medical expenses, remembering that is subject to a percentage of your adjusted gross income. So if you have expenses that are greater than that 7.5% of your AGI, then you are able to deduct the amount that's greater than that 7.5% of AGI. So showing up with your tax preparer with a box full of receipts is not recommended. Having your information together and in order is important to exercise due diligence in terms of creating your taxes the most accurate with all the information that you have. And again, keeping in mind the different filing statuses. There are times that I encounter individuals that are married, but they are wanting to file single. You know, it's like, that's not your status. You know, that status is basically determined based on your status as of the last day of the year. So whatever your status is on December 31st, 2022, that will determine what your filing status should be for your 2022 tax return. Making sure that you have your dependents information correct. When you're submitting your tax returns, if at all possible, submit electronically. Right now, submitting tax returns on paper, it takes forever for them to get processed. So the process for filing your tax return electronically, it happens so much faster. And I encourage you to file electronically if at all possible.
You know,
also,
I wanted to ask real quick about the marital status, because I've talked to people that says that, you know, we file married filing separate. And, you know, it's my understanding that really kind of puts you in the highest tax bracket there is when you do that. And it's like, well, my tax person told me to do that. And I'm trying to figure out why, you know, that would be the case. So, you know, is my thinking correct on that?
That's correct. If you look at the tax table, the tax rate for married filing separately is equivalent to the single tax table, basically. So it is a higher tax table. But there may be some valid reasons why individuals may want to file separately. You know, in my experience, if someone is self-employed and they, you know, don't do a very good job of keeping up with their financial records, you know, their spouse may say, we need to file separately, you know. You know, because when you file jointly, you both share in whatever is on that tax return.
Got it. Yep.
Okay. So there may be valid reasons for filing separately, but typically another thing to remember too, that if you file separately, if one spouse itemizes, the other spouse have to itemize as well.
Really? Okay.
Exactly.
So
you can't, one can't itemize and the other take the standard deduction. I mean, if one itemizes, the other one has to itemize.
So
you each take the standard deduction.
The fact is, I don't want him to know how much money I made. Ain't a good reason to file separate.
Right. Then why is your status on December 31st married? Right.
Got it.
Yeah.
Good stuff, Timothy. I think it's always just a good reminder to come back and just remind people of some of the things. And some of them are, you know, the basic, like having your records together, going there with all of your, you know, social security numbers and, tax documents and that type of thing.
Not to forget birthdays as well.
Mm-hmm.
Yeah, absolutely. Absolutely. So Timothy, if someone wanted to actually, work with you, I'm not sure what states you work in. So what states do you work in as far as filing taxes?
For tax preparation, I work in, I have done tax returns in several states, but my area of specialty is probably in North Carolina. However, I do have clients that I work with outside of North Carolina. And, when it comes to the state taxes, every state have different tax rules. But I do have a couple of clients that are in states that don't have state taxes, so theirs are a lot simpler.
Got it. And so if they want to get a hold of you, how do they do that?
I can be reached at Daye Financial Enterprise at gmail.com. DAYE Financial Enterprise at gmail.com.
There it is, folks. Don't do it to yourself. Go see somebody like Timothy to get it done so we can get it done right. So, Michelle, any last questions or comments you got?
No. This was a good refresher. It took me all the way back, Tony, to our Vita days, right?
Oh,
Yes.
For those of you who may not know, Vita is a voluntary income tax assistant. And back in college, Michelle, myself, my wife, our chapter of NABA, National Association of Black Accountants, we did Vita there in Kalamazoo, Michigan, and we did it in the basement of a church where people could come and get their taxes done, and it was absolutely free to them.
It
so
was.
That
and
was
a learning experience for us.
It was a great learning experience for us.
Yeah.
Great learning experience.
I'm sure back then y'all did them on paper.
Yes, they were all paper.
It was
all paper.
All paper, Timothy. Timothy, y'all old.
I remember.
Yeah. So those, I forgot about that until Michelle mentioned it. So shout out to Bianca May. She was our advisor.
That's right.
That worked at the IRS. That she was one of our chapter advisors.
Yeah.
And that's pretty cool stuff. So, but great memories. So, well, Timothy, thank you, man, for coming in and sharing information. Like I said, it is important reminders. Hopefully, y'all, you'll pick up a couple clients from doing this as well. So, listen, thank you all for dialing in. We're going to be back here again next Tuesday, and we're going to have a young lady from Atlanta is going to be talking to us about your lifestyle. She's a lifestyle coach, so that'll be interesting. So thank you, Facebook user, for saying great information. Y'all have a wonderful evening, and we'll see you next week. All right, take care, everybody.
Thank you.
All right.